Chris Daum, FMI provides investment banking services to the construction industry, and I would think that money is still cheap despite a recent raise in interest rates slightly, so the builders are still building, right?
Absolutely. In fact, we're in the fourth year of a continuous recovery. Total infrastructure construction is about 5% of GDP. Historically, it's about 8% of GDP. So the reality is, as long as the economy continues to grow and recover, there's plenty of upside for infrastructure building across the entire industry.
And what about M&A? Once again, with interest rates still low, this is when the builders go wild.
Not only the builders, but all of the different infrastructures, particularly if you look at energy, industrial, power construction, civil construction. The reality is the buyers are the big global 200, 250 contractors, and they're doing at least one acquisition a year. And without question, they say the U.S. market is the most attractive for them, and the way they get positioned into it is through acquisition.
Can you talk a little bit more about the energy sector? Because it really crashed at the fourth quarter of 2014, and one would think there's not a lot of building going on right now.
Yeah, that's the big misunderstanding of the industry. We've had a slowdown in upstream, and we have the supply chain kind of rebalancing because of a 50% cut in oil prices, but the gas market is booming, and the infrastructure is 12 to 24 months behind all the production assets. And so the reality is in 2015, total midstream and downstream capital construction spending on energy infrastructure is going to be up about 25%, and it might be double in 2016. So we're bullish all across the midstream and the downstream. The big holdup there is finding qualified labor and companies to actually do the work.
Well, talk about the labor market right now. We haven't seen wages rise according to the monthly job numbers. So with commodities down, one would think the builders are pretty happy that they're paying less for the raw materials. But what's going on the labor side?
There's huge upward pressure on wages across the entirety of the industry. The reality is, in 2008 and 2009, when the market crashed, the E&C industry went through the severest and most prolonged downturn in its history. 20% of the labor left the market and never came back. Now you're taking 3% of the total workforce going from general building construction across the industry all the way into the energy side of the industry. And the reality is general commercial building trades, other specialty sectors outside of energy industrial are scrambling to find workers, and that's putting inflation on wages. And most CEOs, their number one problem in the industry, companies like Quanta, public company, Wilbros, Skanska, Turner, finding that next generation of qualified laborers and management is probably the number one issue in the industry.
Here in New York, a lot of the building was pushed by foreign dollars, foreign buyers who wanted to put up buildings so they can park their money here. What happened after the collapse of certain foreign currencies? Did a lot of that foreign money dry up?
Absolutely. Really, it hasn't. The reality is it's kind of counterintuitive. It's really a flight to quality in where to place capital and where the building will happen. The U.S. is still the biggest and most attractive infrastructure market in the world. We have the most developed economy, but the irony is our infrastructure is trending towards third world status. And so we are representing probably, just from our perspective, well over 20 international companies, and their number one place to invest, to acquire, is the U.S., and we don't see that trend slowing down. In fact, probably of the top 200, 250 international E&C companies, they all did at least one acquisition, and almost to a firm, they look at the North American market as being the most attractive.
And then finally, we've seen a big push towards green building. I know that labor is going up. How does this affect costs when millennials especially, they want green apartment buildings and green parks and green malls, but one would think that would cause the prices to rise?
It does, but there's two advantages there. You mentioned the millennials. One thing is the millennial generation, and that's the workforce today's employers going after. Social responsibility and green environmental issues are huge for them. So being able to say you're involved in a green building, you work there, you take it seriously, is a huge recruiting tool for them. And the other advantage we have is that builders and owners are starting to look at the total life cycle of the cost. And the reality is many of these green technologies that are being implemented in today's vertical infrastructure and other projects will pay off over the long term.
All right, thanks a lot, Chris.
Absolutely. Thank you.
And thank you for watching The Street.